Right. Right. I called in a long entry on USD JPY. How did I come to that decision? Right. Now, USD JPY, it approached a critical area. You see this bearish candle, the one I said stops below 106.95, they're going to be cleared. Remember when I said that?
Yeah.
Right. How did I get to know about that? Right. Because there was liquidity because of this bullish candle here. You see this bullish candle here?
Yes.
Let me zoom in a bit. Right. There we go. There's this bullish candle here. Come on. This thing is not liking me today. Let me remove this guy here. There's this bullish candle here to your left. Right. That's the zone I was working on. Right. I'm on an H4 daily, H4 time frame. Let me clear up. Clear drawings. Stop anointing. Right. This is an H4 time frame. I'm gonna go to a daily time frame. Right. Now you can see from a daily time frame where I got that trade from. I'm gonna grab my rectangle too. Right. You see this rejection here, this pause.
Yes.
Yes.
I'm gonna draw from the lowest low to the closing price of that bearish candle. We are talking of this bearish candle here. This is a daily time frame now. That pause in the market, right? That determines what? A fresh demand zone. Remember, there's a fresh zone and an original zone. If you watched the previous video that I did, the long one. So this is
I
a
watched
fresh,
it.
this is a fresh zone on an uptrend. Remember, a demand zone is created during an uptrend. A supply zone is created during a downtrend.
Trend.
Right. So now I've highlighted a fresh demand zone. Remember, these two bearish candles of today and yesterday, they were not like this yesterday. Right. Now that I've highlighted, right. Let me just close here. I need to get so where does this lowest comes in at? Right. So the lowest of the new demand zone came in at 106.60. That was the low of this bearish candle here. This one here, the fresh demand zone that has been created in the market. So from the moment you highlight this demand zone, when market comes down, can you see the market came back in a circular motion? Remember, we've got a circular motion and we've got a channel motion. A V return to a zone, we don't trade that. So now we've got a circular return to that fresh zone, right? Now, when market comes back in that sort of a pattern, what do you look for? What do you anticipate the market to do? Because clearly below this low here, there would have been stops for people who are long, right? There would have been sell orders for people who are anticipating market to go
down.
all the way down, right? Those sell orders, probably most people would have their stops up here, right? For those who are anticipating market to go down. And what does that do to the market? That provides liquidity. You see? The sell stops for people anticipating a breakout for market to go down. The stop losses for people who are long. Remember, there's people who went long. When market came, they put their stop loss just below there, right? So that is going to provide liquidity, right, for the institutional traders. So now I'm going to go to H4 time frame. Take note of that 106.60. Take note of 106.60. Now, can you see now the blue line determines the 106.60? Market first came. I need to move this thing here. I can't be doing this all the time. Right. Right. Market first dropped. You see this bearish candle here? This one. Market dropped, but it didn't spike through, right? The second one, this bearish candle here, that was during the news. There were news that came out from the United States. I think it was 3:30 or 4:30. I can't remember. Market spiked into the demand, engulfed it. At one point in time, the demand was engulfed by this candle with the big wick. You see this candle with the wick? At one time, it engulfed this whole demand, right? Already prior to that, I had already called in the trade saying stops below 106.95 are going to be cleared. I think it was somewhere up here. So market did swipe through the liquidity all the way to 106, probably 106.50, 106.50. There was liquidity there. You see? Because most people were anticipating market to go all the way down. And there were a lot of stops for people who were going long, right? So that's why. So now, that's how I forecasted it, that the stops are going to be swept out before market rallies up. You see? So that's a type of trade you should be in a position to take after identifying your demand zone. Now, let's say you want to take the entry now. How then you determine the entry point? Let me go to H1 time frame. This is where I normally get my entry points. I hardly use 15-minute Cosmos because it doesn't show me like the real price action.
Yeah, it's choppy.
Yeah, it is choppy. Now, can you see the two long trades that I'm in? You see here, these two trades.
Yeah.
Can you see the time that I opened that trade? It was right when this bearish candle here, this is H1 now, was already engulfing the demand zone. You see, it was a big red candle. Remember, we buy when most people are selling. We sell when most people are what? Are buying. Because most retail traders, when they see this big red candle, how many people are going to go short there? Are going to go long, I mean. How many people will be buying? Few people, right?
Yeah.
So the majority would have been selling here in anticipation of market keep going all the way down, right? So now if you look at my entries, let me just clear up and remove this blue line. Right. If you look at the entries, I opened them here. Come on. When this red candle was here, right? So this now means I'm trusting my analysis. I'm trusting this demand zone to hold. You see? I'm trusting this zone to what? To hold. I'm expecting buyers to come in like huge institutional traders. They're not going to accept price to keep going. all the way down. Right. So for most of you guys, what I would advise, enter only when the candle is closed. You see, when that H1 closed, this guy here, the guy with the wick, this rejection would have told you already that this was a stop hand. It was long liquidity being engineered, right? That was a stop hand. So the moment this candle closed, that would have been a perfect entry to the upside. With your stop loss 10 or 15 pips below this low. That means, can you see where my my stop loss is?
Yes.
So when the candle closed, that would have been perfect entry. That's what I would advise you guys to use for now. You wait for that candle close, say on an H1 time frame. You wait for that H1 candle to close. Forget of the other noise that's happening during the fundamental. Wait for the candle to close, then you open your trade, right? Because already you'd have noticed that, okay, this is a clear stop hand. Where's the stop hand happening? At this demand zone. So price spiked through a demand and then rallied away. You see? Most people are gonna say, but that's a small number of pips. But guys, 20 pips is a lot. This thing went all the way to 43 pips. Under normal circumstance, I would have closed this position. But I wanted to show you guys. You see? The same thing happened. The same thing happened on this is what buy. I think it's gold. Right. The same thing happened on gold. So this is H4 gold. You can clearly see sorry. I need to share again. Right. So the same thing happened on gold, but right now it happens to the upside. That means we were going short. So yeah, the only analysis that I did was USDJPY, which was going long. From that instance, you should know by now that, okay, if we were going long on USDJPY, it basically means gold, fiber, they are going to be rock bottom. They are going to the downside. Yeah, in most cases. So now, if you see what happened on gold, there was the stop hand on gold, right? Stop hand where? Yes. Here, this supply zone. You see? There was no way gold was going to clear this big red candle here. No ways. You see? So this supply zone, you see the one with the big red candle?
Yes.
It's still in control of the market. This big candle here, it's still in control of gold to the downside. So there was this stop hand here during the fundamentals that came out yesterday. Market spiked through a supply zone. This zone here, you see, spiked through, close below. You are going to the downside with your stop 10, 15 pips above this high. You can clearly see market never went back there again. You see?
Yeah.
Then today during NFP, market went all the way. You see? But even yesterday, right? Yesterday would have offered a good number of pips, right? From that entry only. Let's say you waited for the H4 candle to close, then you'd have known that this was a stop hand because there's no way market is going to come up. So if you open a short trade here, so that's already 23 pips. Of course, if you hold it longer, like what I did, you see, you'd have had to hold down a drawdown of 80 pips. And on gold, that's a lot, you see. So a drawdown of 80 pips on gold, that's a lot. but eventually it fell 115 pips. So
Yeah.
the moment you decide, okay, this is the zone that I'm going to trade on, this is the demand level that I'm going to focus on, is crucial, right? It's a very, because if you mess up that one, then everything is not going to work. You see, like here on gold right now, this is H1. We've got a demand zone here. You see?
Yep.
We've got a demand zone there. Why do I say so? Because of this price rally. You see here? It cleared up this high, this supply zone here. This is H1, remember? So this supply zone is no longer valid. It's now a demand zone to the upside. So when market comes down here, you see, you anticipate there to be a bit of friction, you see, but it might not hold. The level that is in control here to the downside, this is the level that is in control. That's why I'm anticipating gold to at least go all the way to 1460, 1450. Gold can test those levels, but we just have to wait and see. So let's say you have highlighted that demand there, the one I've highlighted. When market comes down, of course, you anticipate market to spike down. If it spikes into that demand and close above, right, then you know gold is gonna push
Rally
up.
up. Yeah.
You see? So that's how you have to determine your entries on a lower time frame. First things first, you have to highlight your zone on a higher time frame. You see, you have to highlight your zone on a higher time frame. The moment you don't do that, or the moment you highlight an incorrect zone, then that analysis is not going to get you anywhere. You see, like this is called daily chart, right? You can clearly see the supply here. Sorry, it's the shape. We've got a supply zone here. You see? So what do you do when market comes back up there? You see, that's when you go to a lower time frame. You start hunting for those patterns that we have talked about before. The bull channels, the bear channels, you see, in anticipation of market rejecting a zone. You see?
Yeah.
Yeah. So you can only perfect your entries once you get your correct zone on a higher time frame. Then you go to a lower time frame. For instance, now let me go to a daily. Now I'm on an H1. You see? So every time when gold say rallies up into this supply zone here, you see, if gold rallies in this zone here, then you expect 1531 to be tested, right? If it closes above 1531, for instance, then you know that it's gonna go all the way to the upside. But if it rallies and then closes below, then you know it's gonna come to the downside. You know? So for now, Cosmos, my advice for you, for now, try to practice your entries on an H1. You do your analysis daily and H4, right? Then try to look for entries on H1. If you get a pair that you analyze, you get a pair that you highlight a demand zone, and you are not sure of that entry, send it to me and say, Ivan, is this a correct entry? Practice on demo. The reason why I'm saying H1 now is because you're going to get more opportunities to practice, because H1, they close much quicker than, say, if you want to make an entry on a daily chart or on an H4 chart. It means per day you only get like what, 4 times if you're on an H4. But if you want to look for entries on an H1, it means you've got 24 chances of having an entry. You see, you've got 24 hours. Yeah. So practice your entries on a H1. 30 minutes and 15 minutes. No, don't play on those ones because they might mislead you.
Okay.
But practice on an H1. You see, like for instance, we have gold, right? This would have been an entry to the downside. This would have been an entry to the downside. So already that's 2 opportunities. I don't know in how many. Let me see. Control Y. That's in 2 days. So this is Friday and Thursday. So gold did offer 2 opportunities to go to the downside. You see, yesterday and today, gold offered 2 opportunities to go to the downside. To the downside, basing the analysis from what? From this zone here.
So,
you see,
yeah.
this level here. So you'd have got, for aggressive traders, maybe someone like me, I would have already shorted it here, right? And took my profit. Then shorted it again and took my profit. But now for illustration purposes, I left these trades open so that you guys, you can see why I took those trades. You see? Because remember, when it comes to gold, 20 pips, that's a lot. 20 pips, that's a lot. It can cripple your account or it can make your account bigger. Eddie, are you still here?
I remember doing one time. It was gold.
Yeah. So gold, you just need to be careful with it. So I would advise that try to practice your entries on an H1 when you have highlighted, say, your demand or your supply zone on a daily or a weekly chart or H4 chart. Then you practice your entry on an H1 time frame. Yeah. That way you're going to practice more often, you see. And when you're wrong, you definitely know that you're wrong because that H1 time frame is going to move. Imagine we had bought here, right?
Yeah.
And then market
goes down.
This, you see, there you definitely know that, okay, I was wrong. You see? Then you move on to the next one. But with all the knowledge that we have shared so far, there's no reason that you'd have been buying. Yeah. You'd have been looking for short trades to the downside because of this supply zone here. I hope you have understood a bit now.
Yeah. You make it sounded easy.
You know what, Cosmos?
Yes.
I think it's a case of time, right? Time on the charts.
Yeah, I think so. More hours.
Yeah. More hours on the charts. You'll definitely be seeing these things as you go. They'll be like, oh, Ivan was saying this. Oh, Ivan was saying this. You see, like Tendai right now, he's getting the picture now. He's even saying, okay, this is how it goes. He's getting the picture.
The view,
yeah. Because that's the most difficult part. Because everyone has got his own analysis when it comes to the market. So the way you read that market, the way you identify your supply zone, your demand zone is crucial. Because if you mess that up, gone, that trade is not going to work. You see?
Yeah.
So
also me, I noticed on that move for gold, it retraced back 50% of the last week's yesterday or last week's move. Then
which one
keeps on this chart you open now?
Uh-huh.
This is like a retracement from from the, when was it? On the first. That was the lowest time frame. Was.
Let
And
me.
from last week's high and the end of lows for last week, it retraced back to like 50% of all last week. Then that's when we have those entries for sell position.
Yeah, I remember Euro USD. I remember Euro USD, guys. Where's that screenshot? I'm trying to get the screenshot. Just a minute. Where is it? Euro USD. I hope I didn't delete it. I think I did. I think I did. This meeting will end in 10 minutes. Okay, just a minute. Hold on. Okay. No, I still have it. Where is it? Bigger picture. I remember when I sent the Euro USD analysis, I asked everyone to vote, right?
Yes.
Yeah. Everyone, most people, the majority, they voted for Euro USD. Can you see the chart? That Euro USD chart?
Yeah.
The one I said, expecting price to test last week's high or at least 70% retracement before it drops again and break the first monthly demand. Now, if we look on Euro USD, we go to Euro USD, right? I'm going to zoom in. It's unfortunate that I changed this chart. Okay, no, here it is, right? So we are on daily. I'm gonna zoom in. So we got Friday, Thursday, Wednesday, Monday, Sunday, right? So now I'm gonna put the fibs. Last week's I think came in there, and then this was last week's low. Can you see our OTE where it came in? 1.09789. That's almost 70% retracement of last week's move. And then price did drop. Yes, price is pushed up now, but you can see the wicks. Let me go to H1. Zoom out. So the trades that we are talking about are these. You see? That's 20 pips. Another entry, you get 27 pips. You see? That's already 40 pips on one asset. And these pips are like guaranteed. You see, because you definitely know that price is gonna what? Bounce. There's no way that zone is just gonna give up. Can you see now on Cosmos? Can you see on H1?
Yes, I can see.
Euro USD. You see, there is the demand zone, the supply zone. Sorry. You see, you've got the supply zone. It was spiked through first time, market dropped. Spiked through second time, market dropped. You see, if you see the spike that happened, during NFP, can you see how it took out here, this high? There's like a tiny clear above, and then market dropped. You see, so the moment you highlight this zone here, you see, you'd have highlight, okay, I've got a strong supply zone here, right? So you're anticipating this level, this drop here, you're anticipating it to hold when market comes back. And you see, first time it came back, it held, it dropped, right? Second time it came back, it held, dropped during NFP. So you see, that's already two guaranteed trades that would have taken only on Euro USD this week. No need to say, no, I need a lot of entries. I need to make more. You see, the moment you harvest your 25, 26 pips, you get out. You get another entry there. You see, the market gives you another opportunity. It drops again, 34 pips. Already that's 50 pips. You see, that's a lot. And remember now, if it's Euro USD, it means the same thing is happening on gold. The same thing is happening.
I see it's like same pattern which happens in gold. It's the same on Euro USD.
Yes, Euro USD and gold, they drop when the yen is going up, when dollar index is going up. Remember, the yen only moves the same with the dollar. The USD JPY, it rises when the dollar is also rising. You can clearly see. You just have to go to your charts, guys, and read the charts. When you are free, when you are not on your 9 to 5, your 8 to or the graveyard, as Cosmo says.
The slave yard.
The slave yard.
Yeah.
But I hope I managed to clear that a bit, Cosmos, for you, so that you
Yeah,
understand.
it was a refresh I needed. Yeah.
Yeah, we must do this more often, guys. It's unfortunate that people will be at work. Yeah, we have to go to work, but every time we get chance, let's try to link up on Zoom. That's the only way we can we can move forward much better. You see, I got like 4 minutes left because it's coming.
I see Naomi, they still there.
Oh, the small boy. he's trying. He's trying. I don't know. We've got 3 minutes left. Cosmos, do you have something to say?
No, not much. I don't know the other guys.
Did you manage to finish that almost 2-hour video? Most people didn't finish that video.
Yeah,
That one?
it's our
That
hour
1 hour
45.
45.
Yeah.
Yeah, I
I
finished it,
finished that one.
Yeah, there's a lot of info there. So
yeah, but it took me almost a week.
there's no rush. There's no rush. This is Africa. There's no rush. But we must get things done, guys. You see, it's time because next year everyone has to start making money from Forex. We've been doing this for like a year now. You see, we're almost at the end of the year. So next year everyone has to start making his own $20, $30, $20, $30. You see, that's the way we can progress.
$30.
You see, you make your $30, your $50, your $30. You never know. By the end of the week, end of the week, then you'll be like, I've got $200. You see, that's what we have to aim for, guys. You see?
Yeah.
That's what we have to aim for.
At least as for me now, I'm getting the picture now.
Yeah.
A bit, I'm getting there.
Boss Eddie.
Yeah.
My brother. You don't like me anymore, eh?
I know I be busy sometimes. I think on killing me. Time spent on chat is killing me.
No, don't give up. Don't give up.
I don't give up.
Don't give up, guys. You must try to get stuck every time you get a chance, but don't do it when you're tired. You see, don't be on the charts when you're tired. Otherwise, you're just wasting your time.
Yeah.
Anyway, guys, our time is up. It's unfortunate that the girls didn't manage to join, but at least I managed to record the session, so I'll just share it with them.
Okay, thanks, man.
All right, thanks, man. Thanks a lot.
Yeah, we'll try again tomorrow. I'll see if I finish what I'm doing tomorrow a bit early, then we can have another 40-minute session. You see, it doesn't hurt. It's a Saturday. We do another 40-minute session. I'll let you guys know on Telegram.
Oh, all right, thank you.
It has been long. It has been long, man.
It's been long, man. There's like too many excuses with people. So me, I also just chill. You see. All right, guys. Have a great evening. Huh?
All right, same to you.
Cheers.